Hey guys, it's Frank here from Altcoin Buzz, and today is quite an intense day for me because I have entered a pretty large Bitcoin long position with leverage. So I've published a number of videos on the Altcoin Buzz channel talking about Bitcoin. One of the recent ones was here on July 20th, where I talked about the hash ribbons being probably the most bullish indicator that you will ever find on Bitcoin. At that time, the price was 9,178. I have to admit, I was expecting for the potential of a pullback before we had a move up. However, here I was really bullish on Bitcoin. A few days later, I said, this is a game changer for Bitcoin and cryptocurrencies. This was just after the news that US banks would likely be providing custody for crypto assets. And that, in addition to the Visa and the MasterCard and the PayPal news, just got me really bullish. And then, of course, in this video, I was even more bullish when Bitcoin had just hit 10,000, and I was already entering my position here, and I've actually entered a larger position, a much larger position, once we broke 10,500. As I said in my last video, breaking 10,500 will be a real game changer, and that has happened now, and I've been waiting for this for a long time. So before I get down to the weekly chart, I want to show you guys a monthly chart. Now this is the Brave New Coin Liquid Index for Bitcoin, and I recommend you to use this if you're looking at longer time frames. Now the reason for that is that the Brave New Coin Index has been developed to meet the marketplace requirement for a single, reliable and fair USD price for Bitcoin based on real-world trading activity. It says here the BLX captures a comprehensive global sample of liquidity on the highest volume and quality exchanges. They have a lot of solid exchanges here: Bitstamp, Coinbase Pro, Gemini, DEBIT, Kraken. So they essentially take the most reliable exchange data and volume data to create this. So I noticed something interesting on this chart. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button, as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. So before I get to that interesting thing, I just want to point out how insanely bullish this chart is. Now, one way to figure out whether or not you're in a bull market is to look at the moving averages, and the purple line here is the 13 EMA and the orange line is the 21 EMA. If you're on TradingView and you want to do this yourself, just click the indicators. In the search bar, type EMA. Now, the one which I'm using on my chart, which I recommend to you guys as well, is the EMA/MA. So what this gives you is the possibility of editing this. So as you can see, I have all of these numbers over here, and these correspond to different EMAs and MAs here. And I can just change the number of the moving average as I like. And if I don't want all of these moving averages, then I can just select a few of them. As you can see, I have the first 5 selected, which are the 13, 21, 55, 100, and 200 EMA. And coming back to this chart, one way to determine whether or not you're in a bull market is to look at whether or not the lower time frame EMAs are above the higher time frame EMAs. So the 13 EMA here is the lowest time frame EMA we have on this chart. The next one is the 21 EMA, which is this orange one. And look how bullish. Bitcoin has basically been in a bull market ever since the dawn of Bitcoin back in 2010, because the purple line here has essentially been above the orange line all the time. Now, we did have a 5-month period in May 2015 to approximately October 2015, during which the purple line came below the orange one, but it barely came below and came right back up. So this just highlights how bullish Bitcoin is. You know, sometimes you can lose the forest for the trees. I mean, we've now spent the last 30 months in a bear market, essentially, right? I mean, we haven't broken previous highs in terms of the monthly chart for 30 months. Sometimes you can really forget of just how bullish Bitcoin has been for all of its history. You know, people will tell you, look at the stock market history. It's just been going all up and up and up ever since it started. And that's true. And Bitcoin has been around a lot shorter time, but nonetheless, you can see the same long-term trend of just seeing higher highs and higher lows. Now, the interesting thing I noticed is that right now, judging this bear market by the fact that we haven't broken the previous monthly high, in other words, we had a monthly high at about 20,000 over here. Then we had another monthly high over here at 13,000 831, and we haven't broken either of those highs. So in terms of the monthly chart, this means essentially that we've been in a bear market for 31 months. Now have a look at the last bear market we were in, again using the same criteria to judge a bear market. In other words, the whole time from the top of the previous high until the next time we break the monthly high. So over here you can see the top here at 1,178. However, we had another top over here at 666, and then another top you could argue over here at 476. And now look at this. This bear market lasted 30 months. It took 30 months before we had a break above a previous monthly high. And now, as I say, we've also lasted for, well, 31 months now. So given all the bullish news that Bitcoin has had recently, given the fact that it's been in this extended consolidation, which is exactly what this is if you look at the monthly chart as opposed to thinking of it as a bear market, I just think that it's interesting to note that Bitcoin has basically never ever been in a bear market for longer than 30 months, again, judging by when it broke its previous monthly high. So I think it's a nice sign that we have a good chance of breaking this previous high. We're now pretty close to it. It's just a few $1,000s away from the current price. So if you type in Bitcoin news, Forbes, of course, have a high domain rank. So their news articles show up a lot. And I just want to go over this article. First of all, the article is called Bitcoin just suddenly surged towards 12,000, but now might not be the time to buy. Okay, so what is this all about? Now, I don't mean to bash Forbes because they do cover Bitcoin a lot, and most of their articles are pretty solid. And even this one, it takes information from a wide range of sources. But my only issue with this is that some of these sources provide very little, if any, information as to why they're making certain predictions. Our view for the balance of 2020 is still high volatility with a year end of around $7,000 per Bitcoin with a drive to new higher highs in 2021. Why? Gavin Smith further said that he expects a short-term washout this year before the true rally takes off. All right, fair enough, but again, why? So here we finally get something of some substance. And again, the reason I'm reading this to you is not to bash Forbes, but really to try and teach you about what the value is when you're getting cryptocurrency information. And here they talk about the global economy suffering a massive demand shock with the potential to drive Bitcoin lower. Now, this is a real issue. Demand is decreasing worldwide. This is not good for the overall economy, and it's hard to believe that Bitcoin will go on a huge rally while people are struggling to make ends meet. That being said, there are a lot of counter bullish indicators as mentioned in my previous videos. For example, the hash ribbons indicator, the MasterCard news, the PayPal news, the federal banks news, the fact that gold is breaking out, the fact that silver is breaking out, that inflation is increasing. So these are the kind of pieces of news that can help you with your trading. And then they talk about Binance chief executive Changpeng Zhao, who said Bitcoin is still tied to the stock market and a future crash could send the Bitcoin price lower. Now, I actually agree very strongly with this because it is very clear to see in the charts that when the stock market drops heavily, Bitcoin drops heavily as well. So this is certainly something to be aware of. And what I mean here is that when the stock market crashed back on the 18th of February 2020 and came to this low on the 23rd of March 2020, Bitcoin saw a huge correction. And similarly, Bitcoin also saw a correction in October 2018 all the way down to December 2018. So again, just looking at the price movement on the Bitcoin chart, in October 2018, you can see that during this period, we made a big dump. Bitcoin dropped by basically 50%, and Bitcoin also dropped by, well, 65% during the next market dump. So there is strong reason to believe that if the S&P 500 makes another drop, that Bitcoin will see a fall too. So this is certainly something to keep in mind. That being said, the SPX looks pretty healthy. I mean, we had this strong dip down, but now this move up has made up for almost that whole move down. And that, in addition to the fact that the S&P 500 is pretty much a constant, never-ending bull market, makes it hard to make a strong argument that the S&P 500 will have another massive dip. Then again, that is definitely something which you want to keep in mind. And it is certainly true that no matter how much bullish news there is for Bitcoin specifically, if the worldwide markets crash, in other words, the S&P 500 crashes, there is virtually no way that Bitcoin is not going to have a major crash too. One thing which I liked about this Forbes article is how they say predicting the price of Bitcoin on an exact timeline is a fool's errand. And indeed, short time predictions are very hard to make. For example, in my recent video, I said that $10,000 would be a good level to buy Bitcoin. However, my main prediction was that we would break 10.5K before breaking 9K. If you were waiting for $10,000, we never even came down to there. So again, the bigger picture is what you have to keep in mind when entering your trades. Essentially, it's easier to make long-term predictions with Bitcoin than it is to make short-term predictions with Bitcoin. And that's why it's only advanced traders who trade the short-term timeframes. And if you're starting out, it's much more recommended to trade the longer-term timeframes as they are more reliable. That being said, I'm taking you back now to the 1 week chart on Binance, and here you can see this beautiful breakout. I mean, look at this. This very clear strong resistance on the weekly, 1, 2, 3 times that we were testing this 10.5K zone, and now we've had a nice breakout. Now, admittedly, on the weekly, this doesn't look super convincing, but if you go to the daily chart over here, you can see that not only have we broken out here, but we've broken out with very strong volume. We have not seen this volume in 90 days, in 3 months. This, in combination with the fact that we have increasing bullish volume on the daily, tells me that it's relatively unlikely that we will go anywhere below 9.5K certainly. And I think it's also rather unlikely that we get anywhere much below 9,850. Now, the reason for this is that in a bull market, it's very common for the daily 21 EMA to hold as support. And the daily 21 EMA is the orange line here. So if I just keep on drawing that out, it's not going to change all that much over the coming days. It's quite realistic to expect that Bitcoin may come down here, but as I say, I think it's unlikely based on the breakout with volume that everyone has been waiting for a long time. After this substantial period of consolidation, I think it's very unlikely that we break below this level, and this would have us even struggling to get below $10,000. Now, having a look at the RSI, it is somewhat concerning that we reached a high here of 84.77, and this high of 84.77 has not been seen since June 2019, so that's over a year ago when Bitcoin was at the top of its bull market. That being said, this level has been surpassed several times, as you can see in the previous bull market, and it's not entirely impossible that we see a move to up to even 90 before seeing a retracement. Now, unless you're a complete noob to Bitcoin charts, you've probably seen this massive triangle, which is drawn back all the way to the high of December 2017. I'm not a huge fan of this because I don't think it's nearly as relevant as breaking horizontal lines. Nonetheless, because a lot of people are looking at this, it may well be a self-fulfilling prophecy. And of course, we have broken out of this now. Again, the weekly, we're waiting for really solid volume. If you're very conservative, you would look at this and say, well, we barely have a day above 10,500. We could very well come down below. And yep, that's still something to keep in mind as a possibility. Something which I'm keeping in mind with my trade. I'm actually closely managing it, and I have some stop limit sells at key levels. I'll tell you what the key levels are a little bit later on. And this enables me to manage my position so that I will still be safe. Even if we get down to about the $9,000 level, I'll still be all right. If we go down below that, then my whole theory of Bitcoin breaking out of 10.5K is pretty much crushed. But the reason I say this is because I know as beginning traders or even beginning investors, it's often very hard to think about the worst case scenario, to just get stoic and be like, well, what if I'm completely wrong and we crash below 9K and we see new lows? Like you have to be ready for every situation in the market. And that brings me to my next point, which is meditation. So you might not have been expecting this, but meditation, in other words, psychological practice to keep your mind clear and focused and as unbiased as possible, is critical whenever you're making buying or selling decisions. So let me know down in the comments below, do you guys meditate? Do any of you meditate? I've been doing it for a while. I've been doing it on and off. I had several month periods where I meditated daily and other times where I kind of fell off the wagon. But I've been getting back into it again recently. And here is a 5-minute meditation for traders. As you can see, it's very aligned with trading because trading is a high risk activity, and these high-risk, stressful activities require you to have a very calm state of mind. Now, I actually used to be a professional poker player, fun fact, for 4 years before getting into trading, and having a clear state of mind was one of the most critical and certainly the most undervalued traits of playing poker. And this article, which I found, also confirms this. Now, this actually talks about exercise your way to trading profits. So here he talks about a book called Trade Your Way to Financial Freedom. And in this book, renowned American psychologist Dr. Van Tharp discusses in several parts how important your psychology or mindset is to your trading success. He talks about the 3 ingredients to trading, which are the system. So in other words, the tools that you use, your knowledge about trading, the setups that you create, then money management. And this was also extremely important for poker. If you don't manage your bankroll, if you take hits which are too big, given the amount of money that you have, given your risk tolerance, you just won't make it as a trader. And then finally, psychology. Now, very interestingly, he created a pie chart in which he said the system is just 10%, money management is 30%, and the remaining 60% is psychology. And honestly, with poker, this was very similar. If you made emotional decisions which lost you a lot of money, that would just destroy your gains. And it's very similar with trading. So it's very common to get lost in all these patterns and all these technical terms, and certainly they're important, especially if you're a beginner trader. I must admit, if you're just starting out with trading, it's probably more important to know what all the basic terms are. But as you get to the intermediate and advanced level, and as you start really risking money, you have to have a very clear state of mind. So for example, this morning I entered into this large trade, and immediately after, and actually even before that trade, I was meditating to just be very clear about what my goals are with this trade, to not make emotional decisions. And that led me to entering a quite substantial trade at this level. I actually entered at 11,000. I took some profits at 11,200. And right now I also have a stop limit sell below the current level. So let's zoom down all the way to the hourly to show you that. So what I'm seeing on the hourly chart is that we had a previous close at 10,877. And now we have come down here, and I actually had a stop limit sell between 10,850 and 10,820 or so. And so I've actually stopped out of about 25% of my position. The reason being that I want to be very comfortable if we come down to new lows so that I can enter at these lower levels without having to worry about getting liquidated. Now, I don't recommend leverage trading for you guys, but if you have been trading for a while and you are interested in trading on leverage, you can check out the link in the description down below. And in terms of precise support zones that I'm looking at, the fact that we've already broken below this level of 10,883, you can see more clearly here on the 15-minute chart why this was quite important, because we had 2 closes over here, then we had several closes above, again several closes above, and now we've broken below it. So this is not a great sign for the short term. And I've got a few buy orders in this range over here. So as you can see over here, we touched this sort of 10,734 down to the 10,676 zone. I have some buys over here also because remember I stopped out of some of my longs over here around the 10,850 zone. And so I'm looking to buy back in over here. Now, unfortunately, if we break below this, it's not going to be looking great. And before I go to the next support zone, I want to tell you that this is a very volatile market. And as you can see, we have very long wicks here. Just look at this 15-minute candle. We had a wick on this candle, which went down a full 2.6%. Bitcoin went all the way from 10,972 all the way down to 10,676 and came all the way right back up. So this indicates that this is a very volatile market, and it's entirely possible that we will have another wick just coming down below the support and shooting right back up. That being said, if we do break convincingly below this level, similar to how we have done with the 10,872 level, as you can see, we have 1, 2, 3 candles which have closed in below it. The next level we would be looking at, first of all, in terms of previous highs turning into potential support, is the $10,442 level. Now, it will be useful to zoom out a little bit to see where that next support might come in at. So on the hourly here, you can see that we've been hugging. I'm just going to take out these other moving averages to make this even clearer for you guys. We've been hugging the 13 and 21 moving average all the way back here since when we started breaking out, since July 20th. So that's been 8 days already that we haven't broken this orange or purple line. And now, unfortunately, we have a small break below it, but I just want to point out that there is a pretty decent chance that this will still hold as support and that, maybe we'll see another dip down to this level. But I personally think it's more likely than not that we won't even get down to 10,400 or lower. I mean, I'm certainly prepared for it. I trust that you are prepared for it if you're trading this. But in any case, if we really do break these two moving averages, then we want to zoom out to a longer time frame, and this would be the 4-hour time frame. Now, admittedly, if we come down to this moving average, in other words, we've been hugging this 13 EMA for quite a while now. And if we come back to that, let's just draw this out to see where we might come down to. So again, we have this purple line. We can just assume that something along these lines will happen if we have a correction. And at that point, you might find some support around this 10,600 zone over the next sort of 8 to 12 hours. And of course, another thing we can do is to take our trusted Fibonacci tool. Now, I'm going to use this from this point over here using this wave. And if we look at this wave, you can see that the 618 is a common level for retracement. So this, of course, adds credence to the 4-hour 13 EMA holding as support. And that would make our next major level at 10,600. So just to summarize, the two support zones which you might be interested in buying at are, well, pretty much at this current price. We had this low which pushed back very hard from this $10,678 level. So it's possible that we will have a bounce from there. This also corresponds with the 618 approximately of this move up. More generally though, I would say that this is the major support zone, and this would go all the way down to really 10,400. Now the reason for this is that 10,400 or really 10,500, this general zone over here is a very important level. Why? Because this was the level that we had a high at previously, right? Have a look at this. You see, we topped out around 10,392, again 10,541. So this is not a very clear level, and that's why I strongly recommend you guys to draw a box here to mark your potential support zone. And really, this is the very important zone to hold. If we break this, it will take a lot of confidence out of this bull move. And certainly if we break it within the next day or two, because really when you have a breakout out of a level, you want to hold that breakout. You want to hold above that level. You don't want to come down below it, because if you do, then this whole trade setup loses its validity. That being said, for me personally, even if we lose this level, I will still be holding on to my long, pretty much holding onto it down to 9,000. I will be making trades as I have right now. As I said, for example, I exited about 25% of my position at the 10,825 region or so. And I will be buying more as we go down. And if I see another setup similar to the one I saw here on the 15-minute chart, again, just to remind you guys, we had two highs over here. We had two tests of this level. And the third time that we came down, we broke it. This was, of course, also with lower highs. So this was not a good sign. And that's why I sold a fair bit over there. But that being said, I'm generally a bull in this market. I'm looking to accumulate as much Bitcoin as I am. And with that being said, guys, don't forget to comment, like, and subscribe, as it really helps to support the channel. As you know, Matty does the news videos and Leia does the interview videos. They all produce great content, and every time you like our channel, it helps. So go ahead and do that if you haven't already. All right, that's it from me, guys, and I'll see you in the next one.